Hi everyone and welcome to our group presentation. Today we are excited to share our experience participating in Investor Lab trading simulation game as a part of our course here at UiTM. Our trading journey ran from week 7 all the way to week 14. To survive in the today volatile markets, our group didn't just guess our trades. We strictly combined technical analysis, fundamental data, and expert our opinion to build a diversified portfolio. We focus on three major instruments to capture profit and manage our risk: the FKLI, FCPO, and the FGLD. Let's break them down one by one. Let's start with our first instrument, the FKLI. Essentially, the FKLI trades the top 30 largest and most liquid company on Bursa Malaysia, giving us a direct window into the local equity market. We choose the FKLI because it has a massive liquidity, making it incredibly easy to open and close position instantly. To manage this, our team split the workload. Some of us monitor the price chart using technical indicators like moving average, while others track economic news like GDP data or central bank interest rate. By cross-checking our chart with expert analysis report, we were able to use the FKLI effectively to hedge our portfolio and trade the market trend safe. Next up is FCPO, which is the global benchmark for the world palm oil pricing. We specifically include the FCPO because it is highly volatile, which gives us plenty of fast opportunity to lock in speculative profits. Because this market moves so quickly, our group assign dedicated members to closely track the monthly inventory report from the Malaysia Palm Oil Board or MPOB. We look at the fundamental factors like weather anomalies such as El Nino, which can cut down all palm yields and drive price through the roof by blending the supply and demands. Fundamentals with technical momentum indicators. We were able to trade the FCPO strategically while setting tight stop-loss targets to protect our capitals. Finally, we traded the FGLD, which is a Sharia-compliant digital gold contract. A must or gold is historically known as a safe haven asset when the stock market gets rocky or when global geopolitical tension rise. Investors run to gold, pushing FGLD price up. We use the FGLD as our ultimate defensive to diversify our portfolio and balance out our risk. Our team monitor the US dollar index and global inflation rate to time our entries perfectly. In conclusion, this simulation pushed us beyond classroom theory. By splitting our roles and combining technical, fundamental, and expert insight, we learn how to think real fund managers.
Let's look at the technical analysis factors determining the price of crude palm oil futures, analyzing the trading period from January to July 2026. Market action shows a strong bullish rally leading up to April 2026, before entering a clear consolidation phase with prices moving sideways within a horizontal range of approximately 4,400 ringgit to 4,800 ringgit, balancing supply and demand. To navigate this, we utilize two key technical indicators: the 9-day simple moving average to capture short-term trend momentum, and the stochastic oscillator to identify overbought and oversold conditions for potential price reversals near key support and resistance levels. This strategy allowed for successful execution in May. First, a short trade opened at 4,603 ringgit near resistance to capture a downward correction, followed by a long trade opened at 4,497 near the support level to capture a rapid short-term price recovery. Moving on to the fundamental analysis driving FCPO prices, our first major factor is weather and climate, specifically the El Nino phenomenon, which drastically tightens the palm oil supply and demand balance, driving prices up as supply decreases while demand remains stable or rises. Next, global geopolitics play a major role. Rising tensions between the US and Iran disrupt crude oil supply, pushing up crude oil and diesel prices. This shifts the crude oil and gas oil spread, where a wider spread improves demand for palm oil as a biodiesel feedstock, while a narrower spread reduces its attractiveness. Finally, Future sentiment heavily influences market momentum, where active restocking by industry players increases buying activity. When market participants expect higher future demand or even tighter supply, it encourages them to build larger positions, pushing prices even higher.
Today, I will be presenting the technical analysis and trade performance of the FKLI futures contract. Looking at the technical chart, the FKLI recorded a strong bullish rally that peaked in early May 2026 before entering a price correction and subsequent consolidation phase. Currently, prices are trading horizontally around the pivot level of 1,700 ringgit. This sideways movement indicates a temporary balance between supply and demand in the market. To identify short-term trend directions and shift in the market momentum, a moving average indicator was utilized on the daily chart. Additionally, a stochastic oscillator with a 14-1-3 setting was used to detect overbought and oversold conditions, helping us spot potential price reversals. Based on this analysis, we have established two critical market levels, a major resistance level at 1,770 ringgit and a critical support level holding the price floor at 1,740 ringgit. Next, moving on to the specific transaction executed based on these technical setups. First, for the long trade, a position was opened on 6 May 2026 for the FKLIU 26 contract at 1,745.50 cents ringgit, catching the market near its initial momentum recovery. This position was closed the following day on 7 May 2026 at 1,746 ringgit. Second, for the short trade, a position was opened at 1,753 ringgit on 14 May 2026 for the FKLIK 26 contract. This trade was executed near the major resistance level to capture a short-term downward correction in the index. I am going to present the factors that determine the price of KLCI using fundamental analysis. To put it simply, there are three main areas that move our stock market index. Let's start with the first area, economic indicators and monetary policy. OPR and interest rates, any changes in the overnight policy rate OPR by Bank Negara Malaysia will change the cost of borrowing for businesses. This directly affects how much profit banks can make. GDP and inflation. When the economy is doing great, high GDP, company makes more money. However, if inflation is too high, it cuts into the profit margins of businesses on the index. The second area is corporate income and fund flow. Blue chip performance. The KLCI index depends heavily on big, stable companies like Maybank and Public Bank. When these companies make good money, they push the whole index up. Foreign fund flow. This refers to money coming in or going out from foreign investors. When foreign investors buy or sell our stock, it directly pushes the index up or down. The final area is market mood and geopolitics. International market correlation. Trends in big global markets like the US and China deeply affect how local investors feel and behave. Political stability. Local political stability and good government policies are very important. They give foreign investors the confidence to put their money in Malaysia. So, in conclusion, the price of the LCI is shaped by how the economy is managed, how well big companies are performing, and how stable the country.
Next, I will explain the technical analysis of FGLD from January 2026 until July 2026. Based on the price chart, FGLD showed a bearish trend after hitting its peak at around $5.40. The price then declined and entered a sideways consolidation phase, trading between $4 and $4.20. Looking at the 9-day simple moving average, the price is moving very close to the SMA line. This indicates that the market is currently lacking a strong upward or downward trend. Next, the stochastic oscillator is around 79, which is close to the overbought zone. This suggests that buying momentum is weakening and there is a possibility of a price pullback. The support and resistance levels are also important. The main support is around $4, while the resistance is near $4.20. The price needs to break above the resistance level before a stronger uptrend can begin. Based on this analysis, a long position open near the support level at $4 could benefit from a short-term recovery. Meanwhile, a short position opened near $4.80 would have captured the previous downward movement towards $4.20. Besides technical analysis, we also look at the fundamental factors that influence the price of FGLD. The first factor is global gold prices. Since FGLD is gold-related ETF, its price generally moves in line with global gold prices. When gold prices increases, the value of FGLD usually rises as well. The second factor is the supply and demand for gold. Strong demand together with limited supply pushes gold prices higher, which positively affects FGLD. On the other hand, weaker demand or higher gold production may reduce gold prices and lower the value of FGLD. The final factor is the Malaysia Ringgit of MYR exchange rate. A weaker ringgit increases the local price of gold, which can rise the value of FGLD. In contrast, a stronger ringgit lowers the local gold price and may reduce the FGLD's value. Overall, both technical indicators and fundamental factors should be considered together before making any investment decision, as they provide a more complete understanding of FGLD's price movements.
I will be explaining about the overall trading performance of our group. I have prepared a comparative table containing the quantitative metrics for all 6 group members, outlining trades, net profit and loss, and also ROI. This table breaks down the final standing and performance metrics for each member of our group throughout the trading simulation. As you can see, there is a wide variance in outcomes, which highlight how different strategic frameworks play out in real-time markets. Adam Zairuddin achieved the peak result here, netting a total trading profit of RM26,215, which translates to a stellar 26.22% return on investment. If you look closely at the number of trades column, it perfectly validates our emphasis on efficiency. Adam achieved his top-tier profit with only 46 trades, whereas other profitable portfolios in our team require significantly higher trade volumes, such as 62 trades for Hadirah and also 59 trades for Farihin to reach their respective 15% marks. This data clearly proved that position over volume was our winning catalyst. I have also prepared a vertical bar chart. Looking at it visually, you can immediately spot the stark contrast in results. On one end of the spectrum, Adam's portfolio stands out clearly as our primary engine or driver of group returns, followed closely by strong profitable runs from Hadirah and Farihin, while on the other end, we see the downside of market risk, with Iman's portfolio enduring a noticeable drawback of over negative RM15,000. This visual gap emphasizes exactly why risk management matters, and it leads us perfectly into our next section, where we will break down the precise tactical strengths that kept Adam's portfolio securely on top of the green side of this chart. Next, I'm going to talk about the strength of our trading performance. Moving into our execution strategy, our results came down to a single principle, which is quality over quantity. Instead of chasing high trade volumes, we focus on high alpha and precision execution. We used 46 out of our 30 required trades. This extreme efficiency yielded the highest profit in our group, delivering an outstanding 26.22% ROI. A massive driver of this was tactical discipline. Rather than spreading capital thin, we specialized in crude palm oil futures. We treated SCPO as our primary profit engine, dedicating 63% of our total activity, 29 out of 46 trades, strictly to this asset. This deep concentration allowed us to truly master its specific price movement and momentum, giving us a sharp edge over broader market noise. Finally, a winning strategy is nothing without capital protection. As the simulation wound down, our priority shifted to proactively locking in our gains. We aggressively mitigated risk by converting complex derivative positions into cash, with a total profit of RM26,215 to fully shield our top ranking from overnight price gaps or margin calls. We left just 2 open micro units remaining. Ultimately, this balance of concentrated execution and disciplined risk management is what secured our top-tier performance.
Alright guys, let's move on the most important and probably the most painful part of our review, the weaknesses of our trading over the last 8 weeks. On this slide, we have broken down our main struggles into 3 key areas that explain why our performance has such extreme up and downs. First, we have overtrading and strategical mismatch. Simply put,
we were often too impatient and too eager to chase quick profit. We end up executing a massive volume of trades, but our actual return were very low. In trading, every transaction costs money due to brokerage fees and spreads. So trading too frequently without a solid strategic setup just end up eroding our capital. A lot of this happened because of emotional execution. Basically, buying or selling on panic rather than sticking to a plan. The second major weakness was inaccurate timing and risk exposure. Here, our biggest issue was entering the market at sub-optional turning point. Because we were trading highly leveraged contracts like FKLI and FCPO, a slight mistake in our timing could trigger huge losses in a second. We were highly vulnerable because we frequently disregarded key chart boundaries like support and resistance level, leaving our position completely exposed to high risk. Lastly, we had inconsistent asset allocation, meaning our group's capital management was all over the place. Our group operations were not very cohesive. Each of us managed our account individually without unified set of rules. This lack of rigid diversification limit create huge performance discrepancies among our members. For example, Adam made an amazing profit of over 26,000 ringgit, while Iman faced a drawdown of over 15,000 ringgit. This gap became so wide because we didn't set strict boundaries to protect our group's collective equity. Now, let's talk about the exciting part, how we actually fix this issue. On this slide, we have structured our recommendation for improvement into 3 very practical rules. First, we need strict risk mitigation. Basically, no more letting our losing trades run wild. We are going to enforce a mandatory hard stop loss of 1% to 2% on every single active trade we open. On top of that, we want to establish a weekly 5% account drawdown circuit breaker. If anyone's account dropped by 5% and in a single week, we systematically close out all open position and freeze trading to step back, reevaluate and protect the group's collective equity before major capital erosion happen. Second, we have to establish setup quality filter to kill our over-trading habit. Instead of chasing every little market wiggle, we are capping our trade to a maximum of 2 to 3 entries per day. This prevents us from trading out of boredom or market noise. To back this up, we are introducing a strict confluence rule, which means we need at least 3 distinct indicator or technical signal to line up perfectly before anyone is allowed to launch a contract. Quality over quantity, always. Finally, we have dynamic specialization. We want to move away from everyone trading everything and instead copy what made Adam so successful. We are proposing to organize the team into dedicated asset desks based on individual performance strength. We will also dynamically manage our capital limits. If a member is trading with high efficiency and making consistent return, we scale their contract limit upward. But if a trader is undergoing tough drawdown, we dynamically scale down their margins to keep the group's overall portfolio safe and secure. To wrap everything up, let's look at our final conclusion. This 8-week simulation was a massive eye-opener for us. It did a fantastic job of bridging the gap between textbook derivative theory and how real financial market actually breathe and move across FKLI, FCPO, and FGLT. This biggest lesson we took home is that successful trading has almost nothing to do with luck or placing a million trades. It is entirely about tactical discipline and asset focus. This was crystal clear when we compare our results. Adam proved this by securing a massive 26,215 ringgit profit using just 46 highly strategic, specialized trade in the FCPO market. On the other hand, our struggle with overtrading and emotional decisions show us exactly why a group needs a strict, professional system in the place to survive. So, moving forward, we are committing to 3 main rules: enforcing our 1% to 2% stop losses limit, structuring ourselves into specialized asset desks, and continuing to practice on simulated Bursa Malaysia platform to master reading market trend. We want to build solid confidence and a bulletproof strategy in a demo environment before we ever think about risking real capital. That's all from us. Thank you.